Hey everyone, Justin Holland here with the Mad Insurance Show, making a difference in insurance. We've got another great show for you today. I want to thank everybody that's joining us either online. Maybe you're watching this podcast on our YouTube channel. Just to get that plug out there, you can follow us online at youtube.com/at Mad Insurance Show. So a lot of people are listening to the show either online through that, or you're listening to us on KTSA. You're driving around town or in South Texas, and you're chiming into 550. And welcome to the show. If this is the first time you're hearing us, I can't thank you enough for giving us a few minutes to talk about insurance topics today. Little background, I'm Justin Holland. I have a brokerage named Texas State Insurance Services, where we focus on individual health insurance, Medicare plans for seniors, as well as group benefits and employee benefits. We can help out with other odds and ends, dental insurance, vision insurance, gap insurance, as well as travel insurance for those that need insurance while they're traveling abroad as well. And if you have any questions regarding insurance needs as far as that health side, whether it's be your small business or medium or large size business, as well as Medicare and individual options, give us a call at 210-880-5316, or you can visit us online at txstateinsurance.com. Give us a call, fill out a contact form, and we'll be in touch, and you will be talking to me. And I'm going to see how our brokerage can help you out and possibly see if we can get you some solutions or maybe uncover some opportunities or options that might have been overlooked for you. Not only do we have Texas State Insurance Services, but we've got Palmetto Life Group. Palmetto Life Group is an agency I created to focus specifically on life insurance, long-term care insurance, retirement options, as well as Social Security analysis as it relates to your retirement. That's been pretty popular lately, especially for many of our clients that are reaching out to us and finding out that we have that service. And then we've added auto, home, and commercial lines of support as well. We're slowly learning that side of the business. We've got some great tools to be able to shop, most of the major auto and home and commercial lines out there. So give us a shot on that. If you're happy where you're at, great, no problem. But if you'd like a life insurance quote, long-term care, need the Social Security analysis for you or a loved one, as well as auto, home, and commercial lines, you can reach us at 877-357-5316, or you can also go to palmettolifegroup.com and complete a contact form as well there. So Texas State Insurance Services is going to help you everything health insurance and employee benefits, as well as Medicare. Palmetto Life Group really going to focus on your life, long-term care, auto, home, and commercial needs as well as umbrella policies too. So we are really having some fun with the news articles that come up in our industry. And specifically, most of those articles are pertaining to health insurance. And I like talking about updates that might go overlooked and is under the radar on the typical news feed that most people see. And I'm going to chime in and basically give some comments on some of the stuff that's going on in the industry right now. And every show I try to do this. Sometimes I spend a whole show just because there's so many updates on what's going on in the industry. And I think it's important for you as the listener, you as the viewer, to understand what's going on and what to expect. Because a lot of the articles and the updates that we get today aren't going to affect immediately, but they are going to affect you later this year or the following year. And you want to prepare for that. You want not only yourself, but your family members, loved ones, friends, as well as your valued employees to be prepared with what could be coming and what we're forecasting for the insurance industry. So let's dive in to a few articles that I found online and see if this piques some interest and helps y'all listening out there. So the first one I came across, this was April 6, 2026. It was listed by y.org, one of their articles. They're based out of Pennsylvania. And you're like, Justin, why are we talking about Pennsylvania? Well, if it's happening in other states, there's a good chance it could happen in Texas. So we want to make sure that we are cognizant of what's going on in other states. Okay. And I've brought this up on prior shows as well and other issues that are coming up in other states. But this one jumped out at me. 120,000 Pennsylvanians have dropped ACA health insurance since the loss of federal subsidies. 120,000 people in Pennsylvania. High monthly premium payments without enhanced tax credits, coupled with high costs of daily living, have caused some to cut their insurance. I've been talking about this since the beginning of the year, how we had clients just basically terminate their insurance coverage because it was unaffordable. Some of them are still trying to just struggle and pay those premiums, and we anticipate more to fall off. As far as Pennsylvania, 120,000 people have dropped out of their ACA health insurance since the loss of the federal subsidies. And I think the expanded subsidies have a lot to do with this. So this was an important article that I wanted to bring up because other states are reeling and showing loss of enrollments when it comes down to individual health insurance. Now, let's make some things clear. You've got different health coverage and insurance options that you can take advantage of. Excuse me. And you have the Affordable Care Act, individual health insurance, been around for years, well over a decade. Make no mistake, the Affordable Care Act is all encompassing of most healthcare legislation or health insurance legislation. And a lot of people think, oh, it's still today, even after 10, 12 years, they're like, oh, well, I don't qualify. Well, sometimes you do qualify. It could be based off of adjusted gross income to qualify for subsidized coverage, where basically you're going to get a tax credit fronted on your monthly health insurance premium. That's going to be based on your age, your family size, the tax dependence, the adjusted gross income, not gross. Although if you're a self-employed, it's really going to be focused on your adjusted gross income, because you could have expenses to lower that exposure. Or if you're a straight employee but just not offered health insurance, they're going to be basing it off of your gross income. But that's one facet of insurance. The other insurance options out there are health coverage. You can go on the internet, find short-term medical coverage. You can find Medishare, these Christian sharing, ministry plans that are out there. And those are great for a lot of people. But at the same time, it's got medical underwriting. Pre-existing conditions do apply. And I will tell you, I see more people that are unhealthy than healthy nowadays. And I hate to say that, but that is just the case. So there's a small percentage of individuals that will qualify for health coverage when they would like to. And outside of that is an employer-sponsored health insurance plan. You could be self-employed and create your own employer-sponsored plan, or you could be employed by a company that offers a benefits plan and structure. So many people out there watching this video, listening to us over the airwaves or online, you might have access to an employee-sponsored plan. Sometimes those plans are expensive. They definitely get more expensive when you add a spouse, children, one or the other, or both on those plans. However, that those are really the only options you got as far as Affordable Care Act insurance, which if you hadn't enrolled already, you missed that opportunity. January 15th was the last date to enroll in effective coverage. Health coverage you can typically get instantly or by the end of the following month or beginning of the following month. And then short-term medical is only going to last you 4 months, typically at a time. So that's just not a good long-term solution unless you're just bridging the gap from getting one employer-sponsored plan to another employer-sponsored plan. And then employee-sponsored insurance. I have quite a few recently that had said, hey, Justin, the Affordable Care Act plans are just not working for us. We need a PPO plan. Okay, I'm going to give you let's just dive into one example right now. This is real example that just fell in our lap. A trusted client referred these individuals over to us. I get a call last week, and the spouse, the wife, was like, "Hey, listen, my husband had a stroke, and it's a bad deal. And although we've got our sharing plan that we've had, it's worked out great. They're just not going to cover or be accepted at the specialized facilities that I need to get my husband in. How can you help?" So right off the bat, I'm thinking, okay, we might need to look at Affordable Care Act plans. Um, Unfortunately, because they are not on what's considered health insurance, losing that coverage is not going to be a qualifying event for an Affordable Care Act plan. So that is just really not an option. So we looked at a PPO option that we have for groups, and it's True Health Insurance, okay, PPO network. And we were able to utilize their small business and offer a plan through that, and it helped. And we actually just got approval on that plan yesterday. It retroacted to April 1st. And the wife was almost in tears because she was able to get her husband coverage or health insurance, not coverage. It's health insurance, true health insurance with a PPO network that is accepted. I'll be shocked if nobody accepts this health insurance that they've got now. Now, are they paying a little bit more for that premium? No question. However, they've got the peace of mind that they can see any doctor they want pretty much and any specialist. And that gives my clients that much more momentum, that more much more drive to survive and tackle their medical conditions or the issues that they're coming up with medically with great insurance to back them up. Again, there's a cost to it. However, if you need that peace of mind, you got to give us a call. You got to reach out to us because we can help you with that. I have solutions that a lot of times are overlooked. This lady scoured the internet, talked to other agencies. She was in the Houston area of all places, which is, there's plenty of agents and brokers in Houston, but she got referred to us here in San Antonio to me, and we had the solution. So we pride ourselves on that. We're one of the few brokerages that's familiar with group health insurance, small, medium, and large companies. We're familiar with Medicare plans for seniors. We're familiar with the individual health insurance and coverage options. The fact that we are registered Social Security analysts, so we can help, prepare our clients for Social Security. We've also adapted in the auto, home, and commercial lines of business. So that's something that I'm kind of planting my flag in here in San Antonio and South Texas is we are going to be able to help you in all aspects of insurance. And I think that's important because a lot of these times, you want somebody, yeah, don't get me wrong. I mean, I can understand diversifying agents, but when you've got a great credible agent that's going to focus and help you on your health insurance, your Medicare, your employee benefits, also help you with the renewals on your auto, home, and commercial lines. That's great. You're not trying to communicate with multiple people. We can try to get those renewals in line with each other. So you're just doing one annual renewal review, if that, or at least just with one direct person. And I think that's important for our listeners to know that we have access to be able to help them with that. So if you're just tuning in, we are about almost 13, 14 minutes deep into the show. This is the Mad Insurance Show, making a difference in insurance. And I'm your host, Justin Holland. As a reminder, we've got Texas State Insurance Services that I own. It's my agency here in town that focuses really on the health insurance side of the business, Medicare, individual health, employee benefits. And as a reminder, that phone number is 210-880-5316, or you can visit us online at txstateinsurance.com. Also, we've got Palmetto Life Group that's going to help out with life insurance, long term care, Social Security analysis as it relates to retirement, as well as auto, home, and commercial lines. That phone number is 877-357-5316, or you can visit us online at palmettolifegroup.com. Both companies have contact forums on the site. You just want to send us a quick message, or you can reach out to us by those phone numbers, or even text us if you need to as well. But if you Google Texas State Insurance Services in San Antonio, you'll find us. If you Google Palmetto Life Group, you'll find us in the San Antonio and South Texas area as well. So thank you so much for joining us on the show. We're going to dive into some more articles regarding the industry and try to help provide some awareness on this week's show. So I just wrapped up an article on the fact that 120,000 Pennsylvanians have dropped their Affordable Care Act insurance. And the reason I'm bringing that up is just we've got to keep a close eye on that for Texas residents and insureds. Another thing that I came across, this was published yesterday, April 7th, with Investopedia, and health insurance stocks are soaring on a Medicare update. Here's what you need to know. So I had talked about this, I believe, on the past 2 weeks regarding the health insurance industry as it relates to Medicare. CMS and the government basically fund these Medicare carriers, and they give them, the money to be able to bankroll and help with these plans. I'll just be very clear. Most all Medicare plans are subsidized, not just the Medicare A and B, but also that supplement plan that you have for the medical, the supplement that you have for standalone prescription drug coverage, the Medicare Advantage plan that you could be on. All of that has some types of subsidies and government assistance. So, what went down, and this is why the insurance carrier stocks are increasing because they were plummeting on the prior news that they were relaying. The Centers for Medicare and Medicaid Services on Tuesday said that it pays private insurance administration Medicare Advantage plans will increase to 2.5%, or about $13 billion next year. The CMS in January proposed increasing payments less than 0.1%, or about $700 million. So that is a significant increase on what they were relaying back in January. So you're going to notice the insurance carriers a little bit happier about that because they were scrambling. And even with that increase, I don't know if that's going to help keep benefits in place that you typically are able to take advantage of with your current Medicare Advantage plans. I'm going to go over some details. Actually, let me do that right now. I'll go over what we might see because of the CMS update. So CMS just raised the 2027 Medicare Advantage rate to 2.48%. I'm looking at another notes article here that I wanted to share with you. A big jump from the initial 0.09% that I mentioned a minute ago. It sounds like relief, but it's not that simple. Carriers are still facing major pressure, which means benefit adjustments are coming. Service areas may shrink again. Strategy matters more than ever for those that are on Medicare Advantage plans. So if you're on one of those plans, you need to make sure, and you might have already gotten disrupted this past fall with changes to networks and areas and service areas. We had a handful of clients lose their Medicare Advantage plans because the carrier was pulling out of the area or just dropping the plan. So you want to do an annual review. We are pride ourselves on trying to get back to everybody, hundreds and hundreds, thousands of clients that we've helped out over the years. We've got some really cool automation to help size those plans up for you quickly. And you might not want to wait until the annual enrollment period this fall. You might want to get an assessment of what your Medicare looks like now, especially if you've had some updates in medications. Perfect example that I got a call, actually a text message, and then we finally spoke over the phone on Monday from a client. And she was like, "Hey, I got prescribed this medication. They're wanting $800 at the pharmacy. They're saying I got a $2,000 deductible," which it wasn't true. But we were able to process the situation. And ultimately, what happened is the doctor for this Medicare client of ours was prescribing them a higher tier medication, a tier level 4 medication. Now, when we initially did their review and got them into the new plan for January 1, that medication was not in play. So we put them on a specific plan, and probably any other plan that we could have considered would have still had the same exposure. But tier level 1 and 2, really no copay or very minimal, and it's not subject to a prescription drug deductible. The deductible on her plan is $615. So if she's taking a higher cost medication, $800, $1,000, then you're going to need to meet that deductible. So, and not only that, if you're going to continue on this expensive medication, it's more than likely going to put you into your catastrophic maximum of $2,100 for the year. So I explained that to the client. She goes, "God, I don't know if I want to spend that much." It's like, listen, if you need this medication, just know that you're going to max out at $2,100. You're gonna have to pony up some money. You're gonna have that exposure, but once you hit that, you're not out of pocket anymore on that. But where I'm going with this is things change, doctors change, medications that you're taking are updated, and it's important for us as an agent broker to know what those changes are. And a lot of times, a client doesn't reach out to us until they get sticker shock at the pharmacy and realize, what's going on or happening. And I would just recommend that if you anytime you get an adjustment of a change in doctor or medication, you reach out to your agent. Okay. I tell everybody that we engage off of that, whether it's an existing client, new potential client, let us know because what we quoted for that new client might have changed or probably would change if we knew that there was a doctor change or any medications on the specific plans that we were looking at. So that's important to keep in mind. Um, let's dive into a little bit more on this CMS increasing their Medicare Advantage payments by $13 billion for 2027. That increase is designed to help for the account of rising medication or medical cost. It's going to reinforce their star rating programs and incentives. It's going to reflect an updated risk adjustment for calculations. So let's dive into this a little bit. I think this is important for y'all to know. The Medicare Advantage plans specifically are rated by the government through a star program, up to 5 stars. Now, years ago, there's a handful of plans that had 5 stars, and the carriers loved that when they got that rating or qualified for that from CMS because you could actually change to a 5 star plan at any point during the year. So it basically was a reward to the carrier for making sure they go above and beyond the metrics for Medicare based on what they were assessing, but it also allowed consumers, to possibly make a plan change. And that was good for agent brokers as well to be able to get, help clients change their plans as well. And I will tell you, sometimes agents were putting in people in plans that really didn't need to change. So it's going to be interesting how this plays out. But bottom line is, that increase is going to help subsidize rising medical costs and some of the infrastructure that the carriers are going to have to do for their Medicare plans that they're offering. Let's see if we can pull up a few more articles, and then we're going to dive into some of the scenarios and some of the solutions that we've been helping out. Excuse me again for our clients just in the past few days and weeks. So I came across an NPR article. This is actually from March. When health insurance costs $2,500 per month, family make tough choices. So another reminder that we're seeing families have to cover monthly premium expenses of, 2,000, 3,000, almost $4,000 is what I've seen. That was the highest I'd seen for a monthly premium. Okay. And when you have to take on that type of cost, you either say, hey, you got to bow out and not, cover that and hope you don't get sick or self insure somewhat, or you got to figure out how to get the income to pay for that. These are significant and really tough times for our industry. Um, I'll give you one example to go off on a tangent here. I had a small group client, got the renewal. They got a 20% increase. It's a small two-person group health insurance plan. And the client was not real happy about that, and rightfully so. It's like, how is 20% increase justified? Well, they're age-rated plans, governed by the Affordable Care Act guidelines. It is what it is. Some carriers would possibly consider a lower premium, but when you've got those two-person plans, there's not much risk to spread there. So they're typically, don't want to write that business or underwrite it. So you're stuck with, a fully insured health insurance plan. And he was like, okay, we're relatively healthy and I got to make sure that they're healthy. A lot of people think they're healthy and they're not. I hate to say that. Um, but we are going to look at health coverage options for them where that can be a fraction of what they're paying for their group health insurance plan. So, that's important to know is that if you're on a group health insurance plan or you're on the Affordable Care Act plans and you're relatively healthy and just need this for catastrophic events, I've got a solution for you. I've got something that you probably want to consider. No question, there's a monthly premium to it. That could be a couple $100 per person. That could be 500 or $600, depending on your age. But it could be much less and fractional compared to what you're paying on your premiums now. So if you need insurance options, we need to look at health coverage. Now, health coverage is different than health insurance. I try to repeat this as much as I can and let people know that health coverage is subject to underwriting decisions. You're going to have knockout questions that you need to consider for your health insurance um, or health coverage application. If you had a pre-existing condition, where you've got a chronic, maybe not terminal, but a chronic or critical situation that's happened medically, that could flag it. You could be taking some higher cost medications. That could be an issue on that as well. Or it might not be an issue. You just, hey, I qualify for the coverage. Great. I'm just going to be out of pocket directly for some of my prescription drug costs. I will tell you, recently we've got clients that are using Trump RX. They are getting their Ozempic for $200, or some of these other higher tier medications that would typically cost hundreds more, thousands more, and they're getting them more affordable. The trade-off is it's going to complement a health coverage plan because it's typically not going to be covered, but it's not going to be able to work in cohesion with a employee benefits plan, that you might be on. You can't run it through that insurance or through Trump RX. You can't have it coincide with the Affordable Care Act plans for individuals and families, and it's not going to work with Medicare plans. So there's just a straight discount program that they created directly with the manufacturers on quite a few medications. So you might want to check that out when you have a moment. Now, with the fact that we're kind of on the subject of medications, I wanted to bring up something that United Healthcare sent over to me. This was, just about a week ago, and it discusses the rising GLP-1 demand challenges for employer health insurance plans. Now, I think it's a challenge not only for group benefits plans for these medications, these GLP ones, but it's also a challenge for Medicare clients and individual Affordable Care Act clients. So let's dive into this. This is pretty interesting. With 2 in 5 adults, 1 in 5 children considered obese. The numbers speak for themselves. Obesity is prevalent in America, and it's also expensive. Obesity and related conditions cost the U.S. health system nearly $173 billion a year. That is a sobering way to kick off this update from United Healthcare. Combined with other chronic and metabolic conditions like type 2 diabetes, heart disease, and some other types of cancer, those cost rises to the 4.9 it's got trillion, possibly collectively. In 2023, 28% of United Healthcare members had a metabolic condition, and those members accounted for 56% of their employees' total healthcare spend. So more than half. 4 times more than those without a metabolic condition. This may explain why 60% of surveyed employees or employers said they are looking for more support from their health industry in approving care management for costly conditions. And these costly conditions are because of these higher cost medications. So let's dive in a little bit more. Many have been wondering about the buzz surrounding the glucagon like peptide 1, GLP-1. If you didn't know what GLP stands for glucagon like peptide dash 1, GLP-1 medications. Chief Data and Analytics Officer Craig Kurtzwell and Chief Medical Officer Dr. Rhonda Randall have a word of caution for employers. Don't rush to make decisions about covering these drugs. Instead, they suggest considering a whole person approach, and this could be more effective in cost efficiency. Um, Basically, what they're saying is, listen, don't just rush to cover these medications for your employees and their plans. Maybe we need to be proactive in the health situation of the employees to where they don't need them or can come off of these higher cost medications, which is all the craze. And I was sitting down having dinner with my wife, and we were watching, our favorite shows that we try. That's kind of our downtime at the end of every day, and we'll have dinner and we'll watch one of our shows and watch it on the streaming, online services that we've got. And it's amazing that we'll see articles and commercials for these GLP ones with athletes that are in good shape already. I'm surprised that they needed those medications, or people that look like they're okay already, and or we knew that they were okay. So that was I'm just going on a rant here, but I mean, I see people that absolutely need these GLP-1 medications for their diabetes diagnosis or significant medical condition that they've got. But we also see a lot of people utilizing straight out for weight loss. And the carriers are pushing back and say, "Hey, we're not going to cover this just as a lifestyle medication. We're going to cover it for that chronic or critical need that you might need medically." So don't expect those costs to go down. However, with Trump RX, the Ozempic going down to $200, that is some relief and help where people can reach that medication. And you might have loved ones, family members, you yourself listening might be taking these medications and say, "Hey, Justin, I need some alternatives here. Let us know, and we can try to help you with that." I'm going to wrap up this article from United Healthcare. GLP-1s shouldn't be looked at as a single point solution. Individuals who take these medications and drugs are more successful at achieving and maintaining their weight loss goals when they are part of a comprehensive lifestyle management program. We also have seen employers get more value out of covering them when this is the case. So, man, there was a carrier, Humana, that we did a lot of business with on the group insurance side, and they had like a 365 program, a health program, where it basically rewarded, the employees to stay healthy, be active, get their annual physicals done, walk so much a month. If they had a little tracker on their arm to track their miles and their steps. I think I'm hoping we'll see more carriers take that on. Really haven't seen anybody step up like what Humana had initially. I'm hoping some of the Blues, the Aetnas, and the Uniteds really get aggressive on that to try to incentivize the employees on these group sponsored plans. They could be already working on that, and they'll send us an update. But I think being proactive with the GLP-1 and having some lifestyle changes, diet, exercise, maybe not having as much stress, that could possibly help on that. But this article goes in a little bit more into details on that. But I just wanted to get a little blurb regarding the GLP-1s and how it relates to health insurance, specifically employee benefits here that United Healthcare had sent over to me. Another thing that United Healthcare sent over to me on April 3rd is helping employees mitigate the impact of high cost claims. Okay. That's always important, right? The recent surge in $1 million claims, especially among younger employees, is challenging employers to find ways to reduce the impact. Health claims of 1 million or more have increased by 29% in the past year. That's a significant jump, and 61% over the last 4 years, even worse. In fact, 90% of employees with self-funded health plans have been impacted by these catastrophic claims, which just keep getting more costly. Multi-million dollar claims are now becoming more common, even topping 12.7 million. These claims may be difficult for employees to plan for because they often they come without warning. About half of the employees with these claims had no previous indicators on what was going on or what to expect, and only 5% showed elevated risk of previous reporting periods. So, that's tough. You've got these high increases on these higher claims, $1 million claims, and the data showing, man, I don't know if we could have avoided it. That's important to recognize for any of the groups out there, or if you manage or have a company with a self-insured insurance plan. We'll help medium and large size companies that are self-funded, and this is a huge situation when you have these shock claims just totally rock the plan collectively for all the employees, and I'm seeing 30% increases, 50% increases. And United Healthcare is right to say, hey, listen, we need to try to curb this if we can. Let's dive into this a little bit more. What's causing the high cost claimants? While high cost claims are rising across funding types, United Healthcare data indicated that self-funded employers experience a consistently higher prevalence of catastrophic cases and spend. From year 2023 to 2024, there was a 13% increase in per member per month spend among self-insured plans. Again, this isn't for all employer-sponsored plans. This is just for those companies that are self-funded. And we have many of them, and we help a lot of them with that. And we're going to help out more that are engaging our services. But you want to have a strategy for these higher claimants. So employers are seeing a rise in high cost claims among younger employees. That's frightening that it's younger employees, not just the middle age or senior employees that it could be, of high cost claimants, partly due to advances in treatment and improved survival rates for those with cancer. How can employees reduce the financial impact of high cost claims? Let's talk about that. So they give us 7 strategies, and I'm just going to give the bullet points on this. Encourage employees to engage in preventative care. I stress this on every employee benefits meeting that I take care of, and I take care of a lot of them. I try to remind employees, hey, if you're on this health insurance plan, and it's not even just the employees of a plan, this is individual Medicare clients that we service. I encourage them to engage their preventative care. They've got to get their annual physical done. Even getting a simple eye exam, they can check, what's going on with your blood vessels, and there could be a heart condition based off of that. So get your eyes checked, get your teeth checked. A lot of health decay starts with our mouth. So not only on getting your preventative care done for your annual physicals and your blood draw, man, get that dental and vision plan in place because it could save your life and it could help you keep from having any significant issues in the future. So that's number one. Number two is analyze the claims data to optimize care management. And you really need a specialized broker to be able to do that. A lot of times it's just, hey, getting the renewal, really not addressing what the issues are with the plan. And you really want to dive into claims data. That's something that we pride ourselves with our partners on our medium and large size groups is that we really hone in on the data and the analytics, and we try to provide some solutions that are probably overlooked by maybe the current broker or others that you're talking to on making a change to. Let us know on that. Number three, encourage use of proven centers of excellence. Managing complex and chronic conditions required an integrative approach, and the COEs help identify the best available care for conditions. So that's typically going to be subject to your insurance carrier, but that's number three. Number four is ensure access to clinical management programs. Employees can take chronic condition management a step further by working with a carrier that invests in clinical management programs focused on specific chronic conditions. We're seeing more of this from employer sponsored plans. And it's pretty cool because it's basically like the managed care or chronic plans that we see in the Medicare industry. It's trying to specialize and hone in on those chronic conditions. We're talking cardiovascular, heart disease, um, diabetes, those situations. Number five, install confidence in claims and payment practices. So when claims are submitted, employers want to be confident in their accuracy. Proven payment integrity solutions are designed to lower costs for the employers who are subsidizing the majority of the insurance costs for the employees, if not all of them, protect their employees' dollars by putting checks and balances in place each stage of the claim process. That's important. You want to make sure you stay on top of those claims, and that could be on smaller, mid, and very large company groups. And we want to help you with that as well. Number six, explore stop loss insurance options. Now, most of the self funded plans that we take care of have some stop loss options. I think some are better than others. So you would want to take that assessment especially if you don't have one in place for your self-funded plan right now. That could be something, instead of self-insuring all of that, it might make sense to just pay for a stop loss and bridge that gap for purchasing that type of insurance. This sets the out-of-pocket maximum for employers, helping protect against significant claims that could possibly come up. And no question, we've seen them for some of our group clients. Number 7, to wrap this article up from United, focus on employee well-being today and beyond. Employers can also build a well-being strategy that puts wellness front and center, including rewards programs, incentivize employees to build healthier habits. I think this is doesn't just should rely on the health insurance carrier. I agree. I think this is something that can be jointly or extended from the company, from the employer as well. Whether it's a two-person operation or a 2,000-person operation, I think it will go a long way and provide peace of mind, loyalty, retention within any group that offers that with their plans. So it wrapped up on this article, just the power of engagement, giving employees the information they need to make the best decisions for their health and their wallets. You really want to be proactive with your employees. And I think a lot of groups, and we try to revitalize that with our groups that we handle for employee benefits. You just got another renewal year and everything. We try to make it exciting. We try, whenever I'm doing these presentation meetings for the employees, it's boring. I get it. It's health insurance, it's employee benefits. Okay, just sign me up, or I don't need it, waive me. A lot of that's the attitude. And I think if you create a good, inviting situation and let the employees know that you truly care, you want to answer their questions, you want to let them know about the good news on the renewal, not just the bad news. A lot of times it's just increasing health insurance costs, but we try to help make sure we help complement the group benefits offering for these employers and that they're offering their employees. And that's been nice when we have more engagement on poor engagement prior years, or when we take over a new client, they're like, "Hey, this is how we were expecting to have enrollments go." We want it upbeat. We want it to be proactive with the employees, and we don't want it just to kind of be a cattle call and just get through the motions off of that. So I think that's important. The power of engagement as we wrap up this important article with United Healthcare. Any of these topics or situations that I'm bringing up during the show, give us a call, reach out to us, visit our website and say, "Hey, Justin, I heard you talking about employee benefits mitigating high cost claims. Justin, I heard you talking about GLPs. Justin, I heard you talking about auto and home insurance." Give us a call and reach out to us. That's why we have this show, is to provide these awareness, these articles, these updates on what's going on in the multiple facets of the insurance industry. Just as a reminder, we are here with the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland, with Texas State Insurance Services and Palmetto Life Group. Let's talk about that quickly, and then we're going to get back to the topics that I'm wanting to bring up for this week's show. But this show in general is just everything insurance. Texas State Insurance Services, remember, is going to be specifically for health insurance, Medicare plans, individual health, employee benefits, health coverage options. You might be needing that PPO network that we were talking about earlier, and we'd love to help you with that. And you can call us at 210-880-5316 or visit us online at txstateinsurance.com. Palmetto Life Group is really for life insurance, long-term care, Social Security analysis as it relates to your retirement, as well as auto, home, and commercial lines of business. That number is 877-357-5316, or visit us there at palmettolifegroup.com. If you're listening to the show and you want to take a look at our YouTube channel and say, "Hey, Justin, I'd like to see some of the other shows that you put on," this show will be online as well on our podcast with YouTube. You can go to that location at youtube.com at Mad Insurance Show. So we'd love for you. I think I've got like 5 or 6 followers now. I'm pretty proud of that. We're building that show up. We're trying to get the awareness out. So if you're listening to the show right now or watching this clip, please go to our YouTube channel, like and subscribe the videos and the channel that we've got on there. We love the support as we try to build up this awareness that we're doing with the Mad Insurance Show. And again, one more time, that's youtube.com/at Mad Insurance Show. So let's take a look at a couple more of these articles and details that I wanted to review for the show. Something that I wanted to bring up, I had a company come in yesterday, and I'm pretty excited about that visit that we had yesterday because I think it's going to be a solution if you have a small benefits employee benefits plan, minimum of 5, or if you've got a medium or large size business out there. And it's a gap situation of gap insurance as it relates to health insurance. And if you try to offer a low deductible or a reasonable deductible plan, this is something we need to take a look at to where we can actually bridge the gap. You ultimately have two insurances, make no mistake about that, but it could significantly lower the cost for your group benefits plan. Okay, and that relates to the bottom line of the company as well as the bottom line of the employee's cost as well. And I want to talk about a case study that he sent me over regarding this. It was for a fabrication company, and the challenge for this company is they were facing an 18% increase to their major medical plan due to high medical claims and the medical trend that they were gotten. What's new, right? We're seeing this a lot. The company could not absorb the increase and sought alternative options. Other major medical carriers offered minimal savings or declined to quote. So they were really stuck in this case study. And the options they had, currently was a $1,000 deductible plan for individual and 2,000 for family. Looks like there were about 68 people on the plan, and the current health plan renewal was going to be an 18% increase, and we're talking about $125,000 a year. And that's significant for any company or any individual, $125,000 annual increase. So, what they were able to do in the solution, the group's employer benefits broker, like us, proposed a higher deductible medical plan and pairing it with a secondary gap plan, and that strategic combination improved the overall benefit offering of the group and generated an annual savings of almost $100,000. To be exact, $98,210 for the renewal rates. That's $100,000 savings. As a result, the group experienced a 3.9% increase rather than an 18%. So they were able to bring that into the low single digits for the increase off of that. And that is very good news for the small business that was engaging or staring at a 18% increase. So when you've got those increases, we need to do an analysis and see if we put together a joint plan and try to lower that cost and exposure. Everything goes the same through the health. We're not affecting the base health insurance or the primary insurance plan at all. We're just ultimately subsidizing that with a gap plan, and it's pretty cool. I just wanted to let everybody know that that is an option out there. So if you've got a small group, medium size, or large company plan, this is something that you need to consider, and we probably wanted to do a review on. And just as a reminder, this just relates to health insurance. So Texas State Insurance Services is who you reach out to, and you could call us at 210-880-5316 or visit us online at txstateinsurance.com. But man, I was pretty excited about the visit I had with this carrier to provide the gap solution. And it changes up a little bit of the claims process of what you would have with just the traditional insurance, but we can break it down and show how it's very simple and easy and proactive with the valued employees, doctors, or facilities that they're going to for their primary care. Um, but that's all I've got for that plan. A couple of the other articles and trending industry news that I could try to bring up here. Um, you know what? I want to talked about the gap insurance. We talked about the PPO plan. Let's do a quick reminder and wrap up of the show regarding life insurance. I think that doesn't get brought up enough. A lot of people don't have life insurance. A lot of people have it through the group employer sponsored plan, which is great. You want to have something in place, but a lot of times you need more. And a lot of times it's much more affordable than you think it is. And it's not just about life insurance for dying, it's about living. And every time I have an opportunity, I try to bring this up to my clients, and we bring up some details regarding the living benefits that you see with some of these health insurance carriers. Got a great carrier that basically provides some exceptional living benefits for our clients when it relates to life insurance. Because let's face it, when you look at a standalone long-term care plan, and I got news for everybody, you're gonna have a long-term care need. Okay, I'm gonna have it. I've got family members that have had it, that are going to have it. My family members, some that we've already taken care of, and it really doesn't hit home on long-term care unless you've lived it, unless you've helped out that family member, that loved one, that friend or colleague have to battle and take on a long-term care situation, you don't understand how taxing it can be on your income, on your time, on your job, um, just in the emotional, uh, anguish that people have on dealing with long-term care situations for themselves and for the loved ones that are trying to help with the situation. So if you can always be proactive in just making sure that that's covered for you or your family members, let us know. We'd love to help you do a review because a lot of times these living benefits are going to be accelerated riders that are basically not going to be necessarily a long-term care plan, but they're going to be very close to it. Okay, and complement a lot of times what long-term care needs are. And I'm going to talk about just very quickly, some of the situations where life insurance with living benefits can help. Because if you have a unforeseen death, life insurance is going to come in and save the day and take care of the family. Hopefully, you have enough of it, and it's going to take care of bills and costs and expenses and mortgages and college tuition for those children, and just other things that just need to be addressed in the future of the family. But some of the main things that you need to consider on a life insurance review, again, I'm going to make this quick, is making sure it has terminal illness protection. Okay. If you come down with a terminal illness, that it'll pay out within 24 months or less. So you can take that death benefit before you die. That's huge to be able to leverage that. Chronic illness. Chronic illnesses are covered by quite a few plans out there, some better than others, and we'll help you with that review. But you want to make sure that chronic illness is covered as well. Alzheimer's disease and Lewy body dementia. Not many carriers will cover the Alzheimer's disease or dementia. Okay. This is baked into the life insurance products that we have access to help to provide you and protect yourself, family members, employees, business partners, and such. Critical illness and critical injury. So we're talking, ALS, blindness, cancers, cystic fibrosis, comas, that's more coma is more of an injury. Paralysis is an injury. A heart attack is going to be an illness. Motor neuron disease, strokes. I've got a list of all these scenarios that it is important to consider when you're shopping your life insurance. And if you've got an older life insurance policy, it might be time to just complement that and get some additional insurance on top of that. If you've got it from years ago, it's probably pretty reasonable and expensive, and you might want to just keep that in place. But at some point, it's going to term or have an automatic renewable term and escalate those costs and increases that are just going to be unaffordable. And we have ranges of helping people with just 50, $100,000, or even 10 or 20, or those that need millions of dollars in life insurance. And we can help address all of that exposure and concerns with our staff. And the life insurance part of the business is going to be through Palmetto Life Group. You can reach us at 877-357-5316 or palmettolifegroup.com. And don't forget about Texas State Insurance Services. We talked a lot about health insurance today and a lot of stuff, a lot of noise out there regarding insurance, and hopefully that resonated for you, provided some value to you. You can reach us at Texas State Insurance Services at 210-880-5316, or you can visit us online at txstateinsurance.com. But as always, I cannot thank you enough for listening here on KTSA or on our online broadcast on YouTube. And you're listening to the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland. This is a weekly show that we have 7 p.m.s on KTSA on Saturdays. And obviously, we've got the video on. You can go to that YouTube channel. Remember, that's youtube.com/at Mad Insurance Show. And we'd love to have you like and follow us and subscribe. Thanks again, everybody. Hopefully, we'll have a guest to join us on next week's show. And you can see that online or just tune in next Saturday evening. Talk to you soon.